Hello, good weekend to all. It's Adil here, Fazal, bringing you a review of the European markets for the trading session. It's going to be the 23rd of February 2021, Monday. Okay, so in terms of the insight going into this market, so I'll certainly give you my view. I actually finished negative for the week because I misinterpreted and misunderstood the sheer strength of commodities. Again, just before I start, this video may drag on, unfortunately, but it is important to explain the narrative last week and then obviously the follow through this week as expected. So last week I misunderstood and misinterpreted the sheer strength of commodities, obviously triggered by the news regarding China potentially placing curbs in terms of national security for rare earth minerals. Okay, and that obviously lit a fire under commodities. Also, the scenario with regards to the deep freeze or the big freeze in America, where the Texas oil refineries were basically shut off and the gas refineries as well. I think there was a reduction in 4 million barrels a day and 21 million cubic feet of natural gas as well, which in turn obviously reduces supply, and therefore obviously the demand certainly remains robust given the obviously nations now are adopting the vaccines and the vaccine euphoria going forward. So obviously that lit a fire in the commodities, which in turn obviously lit a fire in the indexes, and specifically the FTSE 100, which I'll be discussing shortly. Even with obviously a hawkish BOE, even with the stronger sterling, the FTSE wasn't kept at bay and certainly rallied, which again I misinterpreted to a large degree, expecting the H&S formation to play out on the back of obviously rising yields globally, which in turn obviously causes all central banks to be hawkish, which in turn reverses the easy monetary policy, which in turn obviously sends equities lower. So, and individuals obviously shifting out of equities into bonds, given the potential uptick in the actual obviously return as well. Okay, so that's basically the shall we say the introduction, and now let's see exactly how that's unfolded. Okay, so the US dollar certainly weak, exceptionally weak, which again sent the Aussie and the Kiwi to new highs. So again, I was expecting, given the fact that yields are rising and the inflation data was picking up as well, one was expecting obviously a more hawkish stance, which in turn obviously would cause the dollar to rally. Okay, obviously equities to sell off. Okay, and that certainly didn't occur at all, obviously with the hopium regarding the stimulus packages as well. But it was sufficient enough to call for a potential drawdown in terms of US equities, given the lofty nature. Okay, so daily chart of the dollar index, as you can see here, certainly remains weak. 60-minute chart certainly explains everything really. Certainly weakness more or less all week in terms of the US dollar index to a large extent, and those obviously rising yields didn't exactly help either. In terms of the commodities, let's just give you a chart of Brent. Very impressive thrust higher on Brent, took out the resistance here around the 60, hit a pivot high of 65 before it started to reverse on the back of news regarding Saudi's increasing production. So again, keep an eye on that. In terms of copper index, again, this is a stock, or this is obviously a certain chart that certainly does defy belief. I mean, what a move! What's a move from 2 to 4, exceeding 4 now, 4.2, potentially even hitting 4.5. So what a move! What a move! Okay, so have to respect that. It's more than double now in terms of copper index just in a short span since obviously the pivot low in March. And it certainly has pushed higher, which again has caused all commodity indexes to push higher. So if I bring up the commodity chart here, as you can see in the daily now, we are now coming into some potential turbulence in terms of the commodity index, but it certainly has been very, very impressive. If you look at the chart of the Aussie, let's quickly give you an insight here in terms of the Aussie daily chart. Very impressive, breaking out to new highs. Okay, on the Aussie chart, and in terms of the Kiwi chart as well, even with a potential outbreak in terms of New Zealand, again that certainly is pushing to new highs as well. If I bring up the daily chart, and again very, very impressive. I was expecting the right shoulder to hold. That certainly hasn't occurred. We've hit a double top, and let's see if we can continue in terms of the move higher, very similar to the Aussie, which was helped by the strong jobs data. Okay, so that's the scenario in terms of the commodity indices really, and metals and mining. FTSE 350 daily chart obviously certainly gives you an insight there. Certainly remains very, very bullish. Whether you want to follow the narrative that obviously Chinese are placing curbs, whether you want to follow the narrative that obviously a deep freeze sent the indexes higher as well, or whether you want to play the rotationary out of tech and into obviously growth on the cyclical aspect, again that certainly is your call as a trader. That's how you have to interpret it, and that's how you trade it. But again, very, very impressive. Very, very impressive, and I certainly was caught off guard. Okay, so that's the scenario. So obviously commodities rally earlier on, which sent indexes higher on the back of hoping and of vaccinations and obviously end of lockdown, etc. But then obviously the negative side is the mutations certainly still remain high. Numbers still are coming down, but not as much as individuals want. So let's see how the market unfolds next week. So let's look at the technical picture now. So as you can see in terms of FTSE, inflation numbers moving higher. In terms of sterling moving higher, hawkish BOE, and obviously commodities starting to reverse in the back of Saudis obviously arguing that they're going to increase production in terms of the supply of oil. And again, obviously you're seeing a weakness on the FTSE here. Okay, so again, the Texas, or basically US, comes back online after post deep freeze and increases their supply, and therefore obviously that puts negative pressure on the commodity side, which in turn obviously causes a FTSE 100 to fall on the back of a stronger sterling as well. So just bear that in mind. Certainly a lot of factors there that one would argue for a potential move lower. So the FTSE 100 on a daily chart, let's give you an insight from that perspective first. Okay, so daily chart here, we took the pivot high to the pivot low. We obviously held fib 75%, and we've remained weak ever since on the FTSE 100. So again, our strong argument here of potential H&S formation setup, so we'll keep an eye on that. In terms of the 60-minute chart, obviously we remain weak. We bounced off the 200 MA. Previous resistance equal support around the 65-75 zone. We've had quite an impressive thrust up to 6650. Whether we can obviously sustain that for now, support remains at 6600. I actually took a long position on Friday. So for the record, so I'm actually long 6595, just in case you think I'm obviously talking my book, and obviously you can certainly take that into consideration as well. Certainly always a bit good to be transparent. Okay, so yes, I'm looking for a bounce higher in terms of the FTSE, given the fact that the Kiwi and the Aussie have broken out, and you are looking for some catch up or potential follow through. Okay, from that perspective. Okay, so 60-minute again, like I said, support has held at 6590 zone, and support is seen further down at 6575, and then you've got the diagonal trend line also taking the pivot low to the pivot high here on the 60-minute chart. You have obviously retraced 61%. This is again a buying opportunity, and fib 75% is around that 6563 zone. So again, my argument certainly would be higher from here. And again, that's exactly what we obviously observed from 6600. We had a rally up to 6640, very impressive. It held previous support equals resistance, and obviously flushed late into the close with regards to the US equities obviously reacting to the yield curves, or should we say yields rising, which in turn obviously indicates a hawkish central bank, and certainly their hands are certainly tied at present in terms of their obviously policy maneuver. So interpreted as being bearish, so bear that in mind. Okay, and commodities obviously such as oil starting to reverse, and given the fact that obviously it was more of a short squeeze dictated by certain policy actions and not obviously an organic fundamental led driver, again it can never be sustained. So just bear that in mind. FTSE 10-minute chart now from my perspective, resistance seen 6650, resistance seen at 6575, and then you got some resistance here at 6685. Previous support equals resistance here at 6700. On the downside, obviously support is at 65 or 6600. Gap fill, obviously we've closed at 6590, and again solid support is seen around the 6575, and therefore my bias certainly does remain bullish on the FTSE until obviously we get to 6650 or 6680. So watch out for those two zones for the interim. In terms of the European indices, let's quickly go through them with you. First of all, obviously Stoxx still remains very bullish on the back of that Draghi obviously switch in terms of Italy. So I think it looks like all focus remains there. Obviously easy monetary policy as well from the ECB. So keep that in mind. You do have an unfilled gap on the Stoxx that needs to close at 3800. If ever there was a time, this obviously is the time, given the scenario that we certainly are presented with. So this, if ever there was a time, now would be the time to potentially close the gap. Okay, in terms of the 10-minute chart, let's just have a look here. We've got a thrust higher from 368, again very impressive, up to 3720. Resistance is seen in terms of the 10-minute chart. You've got gap fill at 3726, you've got resistance here at 3740, and then further resistance is seen just above around the 37, yeah, around the 3740 zone from what you can see. Okay, that remains resistance for the interim in terms of the Euro Stoxx. Okay, now moving on to the German DAX. Now this was an index, obviously again was not participating in the potential euphorian rally. As you can see here, we've not obviously broken past double top. German DAX certainly remains very, very weak from that perspective, and again that's usually due to the mutations and the infection rate still remaining too high, and potential talk of a lockdown certainly isn't something that's being obtained at present, although there are some easing of restrictions, but nothing major or drastic that will obviously help growth obviously spur itself very quickly. So for now you've got support around the 13,850, you've got gap fill here around the 14,050 zone, and then higher up resistance at 14,120. Therefore you are looking for a potential move lower. In terms of the German DAX, again push higher failed, gap fill is seen at 14,060, so again keep an eye on that potential level. In terms of the French CAC, now French CAC from my perspective certainly was helped by the commodity obviously rally earlier on, and obviously now we're giving that back in terms of European indices. So you are looking at resistance, solid resistance around the 6590 zone on the French CAC. Okay, and look for potential downside price action. That's exactly what I'd be looking for if I was a trader of French CAC. Now again, you got gap fill at 5700, so watch out for that potential support gap fill. Then you got a gap fill below at 5600. So this certainly remains very, very vulnerable in my understanding and my interpretation. 10-minute chart again still remains weak, and then if you look at the weekly chart, okay, so again this is one of those indexes that have run and pushed higher, but can it sustain itself? Is it an organic push up, or is it just a temporary one? So again, keep an eye out for the French CAC in terms of its next movement. The FTSE certainly, like I said, certainly remains a player for a potential bounce, and again that would have to be led by its bounce in the FTSE MIB and the Italian, or should we say the FTSE MIB, and obviously the European indices, which is the CAC 40 and the French DAX. So again, we do need them to break their key resistance levels for the markets to push higher. So I think that's a good summation really in terms of fundamentals going forward. So hawkish central banks in the likes of the UK, and obviously the likes of the Fed, even though they are denying it, it's inevitable. But in the interim, obviously markets is what markets focus is, and that's what will count. And certainly seems to be the case that they're interpreting it as the Fed remains easier for longer, and that's why you're seeing such weakness in the US dollar index. So let's see if that unfolds and that reverses next week. It'll be very, very interesting to see how that plays out in terms of its move. If you start to see a sharp sell-off in the dollar, sharp rally in the dollar, then you are looking at risk off in the whole marketplace as well. On that note, please be sure to visit obviously my site, and you can follow me on Twitter there. There's my Twitter handle, okay, trader_Adil. So at trader_Adil, and be sure to obviously feel free to share my content as well. Take care. Goodbye now.